The global economy is currently staring down at one of the most significant energy and supply chain bottlenecks in recent history. So we look at the 2026 blockade of the Strait of Hormuz. The question is about geopolitics. It's about the economic clock of war. How these disruptions ripple through everything from global inflation to your personal portfolio. Joining me today to decode these institutional shifts is a returning favorite and leading voice in market strategy, Stephen Davenport. Today we're asking the tough questions. Is the Strait straight? We'll be breaking down the energy crisis, why this blockade is unique and could trigger and how it could trigger global inflation, the domino effect, our supply chains disruptions and dispute now, fertilizer, food, and other areas, and then institutional strategy, what the smart money is doing in navigating the risk of private credit and institutional portfolios. Stephen, it's great to have you back. Let's dive right into the mechanics of this crisis.
It's great to be back. I think that when I think about what's happened in the last 2 or 3 weeks, I think it's gone much further than I ever expected it to go. I think that for the US to now be trying to squeeze Iran with their own blockade of Iranian assets and Iranian funds is just taking the enemy's ideas and making them your own. I feel that there's a lot to learn from how you can conduct war without having to really get your troops on the ground. I think that's the main thing that I would say the last 2 weeks have taught us, is that you can enact pain on your opponent just by trying to touch their economic and other assets. So I think that what's happening is just a progression in terms of the type of wars we used to wage and the type of wars we wage now. I think that the banking system, the financial system, the relationships between countries who demand or need the oil, I think the biggest thing that keeps Iran the way it is and has not pushed it further is China is the number one client. And so China being the number one client for Iran's oil, I think they would have something to say and something to do if we were to destroy Karg or do anything to really hurt the infrastructure of the country, because China and Iran have a pretty strong relationship, and China can't find that oil in the same quality, in the same way other places. So I think that they need Iran, and they need Iran to stay active. So I think that overall we know there's going to be something going on here, and it's going to have to involve China. So I believe that the meetings that Trump's going to have with Xi in the next month, he would like to be in a position where Xi could help Trump with moving the Iran closer to a final peace deal. So I think it comes down to the main powers again of the world, in the US and China. And it feels a little bit strange because Iran and the Middle East oil, the US has become energy independent. It really doesn't need to be involved in this, but it finds itself as an ally of Israel, stuck right in the middle.
Gotcha. Yeah, that's a broad take, but not quite as broad. A little concentrated in there. Because you just spoke about how we're in different type of warfare now than what people are used to seeing. The economic impacts are definitely something that we're seeing. Just going, I know back when this war started, I was looking at some data and it was saying how, 6 weeks to 8 weeks after the first shots are fired, the stock market is usually higher. The stock market is higher now, even after the pullback today. But historically, that's how it happens. But now let's think about the clock of war, the timetable that we've gotten out here into this 8th week. What do you see some of the lingering effects being if this war is to drag on?
Well, I think that, it takes time for all of these subsidiary uses of oil and natural gas to go through the system. So people had an inventory that they were working through, and now that inventory isn't being replaced. So I think we're going to start to see a greater impact in inflation, a greater impact on some of these companies not being able to deliver any of the products like fertilizer and helium and other byproducts of energy. So I think that we're going to start to see people. I think that the market has looked past a lot. And they've looked past it because they said this will be a short and quick event, and therefore it will cause a spike, but that spike will dissipate quickly once we get the resources back online. Well, we're not getting them back online, and I'm not sure how quickly we are going to see them back online. So I think that the two things that I'd emphasize are, one, Republicans in Congress really need this to be over so they can focus on the midterms and potentially focus on the issue that everybody wants to talk about, which is affordability. Affordability hasn't been addressed, and I think it will be a problem unless we get this over quickly. And the second part of this is, how many of our allies have we burned bridges with? And that'll cost us long term in terms of how we want to operate together against, the axis of evil, as we used to call it, China, Russia, Iran. You might include Nigeria in there. I think that there are countries out there that we look at and we say, we can't imagine how they could be influencing our economy, but they are. And I think that when you look at Iran, I'm sure that, we all appreciate what it means for energy markets, but I'm not sure it should be affecting the US as much as it is. So in my mind, we have to decide, are we really going to let these countries get away with changing the rules and how they operate, or are we going to try to operate as we have with NATO allies in Canada and Mexico, as we've done for 100+ years?
Gotcha. Yeah, I mean, I don't know if the other countries are changing the rules, right? Are they kind of just adapting to what we've done as we've come in and kind of like increased the American exceptionalism trade that we have going on? I don't know. I don't know if they're just adjusting more. But yeah, come November, it will be interesting. I heard today where the Republicans were looking to push a skinny reconciliation bill through, but it doesn't include a lot of things that they have. So they have a lot of problems going on within their party, as do the Democrats. They have a lot of stuff going on. So our political environment is definitely a thing that plays into this whole axis thing that you were talking about, right? Other countries joining together, they see that maybe America can't even get together within our own borders. As far as being energy dependent, yeah, I think we are like continentally energy dependent. I don't know if America's quite energy dependent. I guess if you take in the Venezuelan oil and, I don't know whose oil that is over in the Strait of Hormuz, but, we do have oil. Can China come buy oil from us? I know, and let's dig a little bit deeper. You mentioned people don't realize the global impact of these things. Generally, they just think about the debt that China and USA have, but what are other ways that this impacts people? Main Street.
I mean, I think when you look at the chip fab and the whole chip industry, I believe that what you've seen here in the Strait of Hormuz, I saw a recent commenter say the next strait that will be an issue is the Strait of Taiwan. And 80 to 90% of certain nanometer chips are going through the Strait of Taiwan. So when you think about Taiwan Semi, United Micro, and some of the capabilities that are in Taiwan, and Taiwan is still battling with China over this idea of whether it's a sub-state or whether it's an independent country. I think that one issue, when you think about the demand for AI chips, and if a country like China were to implement some type of a blockade, I think they were thinking about blockades, but I don't think they were thinking quite the way the blockade has unfurled at the Strait of Hormuz. And I think that type of action, not involving any troops on the ground, simply, putting your fleet and putting your air forces along to prevent chip fabrication, which environmentally and otherwise, chips are a huge source of value add. So when you think about disrupting oil, which is a commodity, you can do some substitution of other commodities of nat gas and other things for that capability of oil. You can't substitute a 5 nano for a 3 nano. The chips manufacturer and the chips technology is so critical to these server farms and AI technology that I think the disruption would be significantly more. If we saw a 10% decline because of the Strait of Hormuz, I think we would see a 30% decline if something were to happen in the Strait of Taiwan. So when I look around the world, I look at the way that Russia and the Ukraine have perfected the use of drones. Ukraine has become a force in production, development, and implementation of drones. And now we're seeing them start to help others, like Israel and others, to try to become better at it. And you look at what happens. It's a progression of drones weren't a factor when we had the Iraq war. Now we have Iran, and drones are, I don't know, 80% of the effort around aggression is around drones. And you just look at that and say, this technology and this ability didn't exist 5, 10 years ago. I mean, I remember some people, using drones for photos, but in terms of militarily using drones and being able to control and link up with satellites for precision usage, I think that we're seeing a whole new world. And I guess I'd say by energizing drones and by looking at the way things are falling in these different conflicts, the bad guys or any people who are looking for aggression against their neighbor, we're seeing a lot of maps on how to use them and what to do. And I think that's going to make the likelihood of proclivity for more violence between these countries higher. And I think all of us would like to think, hey, what did we learn from COVID? I guess we learned that we need to be more self-sufficient, and you need to have resources doing many different things in your country, because you never know when that partner or that ally is going to change. And when it changes, so does your opportunity for economic growth and other things. So I guess I'd say, Marcus, my worry is we're becoming better and better at using more and more weapons and more ideas of how to hurt and infiltrate and overcome another country. So I don't think that's necessarily a skill set that I was hoping, that 2026 would be the year of drones or the year of economic damage.
Yeah, that's the shift in drone warfare, like you said, Ukraine and Russia, and it's something that we experience over here in the Strait of Hormuz for sure, where you see, I think we mentioned it last time, where you see $1 million missiles getting taken out by $500 drones or something to that effect. I know since the last time we spoke, I saw a company out west that they're now making 3D printed missiles. So to go to the war effort, we've heard the White House brought in defense companies maybe last week and auto manufacturers to tell them they need to increase production for the war efforts, or just for our defense efforts, air quotes for those listening. So you definitely see a move and a shift. And I think Ukraine was helping us with the drone warfare as well, like how to defend against the drone war. So it's just
yeah, and I think it's cybercrime also. I mean, I think that there have been some attempts at various cyber activities, and I kind of believe after CrowdStrike and some of the problems we've seen, our processes and our infrastructure are challenged. I don't think that we are prepared as we should be in some of these areas of cyber, drone warfare, or even what I'd call chemical. Because I think there are chances that if you look at what, we're talking about nuclear materials in Iran, and I don't think that we know where they are in terms of delivering those materials, or how far along they've gotten. So it's, to me, what we're seeing is when we push people to the wall, we don't know exactly what they'll do to fight back. And so far, I think it's been mostly clean, but I would say that if it got worse, I think it would start to really disturb things. And the last thing I would say is China has always had a weakness in the need for foreign energy. And I think that in doing so, they've dealt with Iran because they like the idea of buying, oil on these shadow carriers who are not recorded or aren't under the right flags. And that type of activity, they can get a lower price per barrel. They're building up their reserves. I think that just like the U.S. had strategic reserves that were significant, we've had to burn them down and lower them. And so China has been smart in trying to build it up. So I think that all areas, Marcus, are on the table in terms of what's going to happen and how. I think there's been more uncertainty now than there was 2 weeks ago, 6 weeks ago, 8 weeks ago. And I just find that the more we get into this, I think the further and farther and harder it's going to be to get out of it. As we haven't talked about troops on the ground in Iran, but in my mind, there's two major areas that could cause the market to really have a problem. One is troops on the Karg Island or troops on the ground around the strait, or China ship being either captured or blown up and containing China oil when it's going to China and it gets not just rerouted but destroyed. I think China would have a bit more of a problem. So to me, that's where this thing could keep going, and I don't like the direction it's going.
Yeah, it seems like the negotiations are very tentative at best, as is this ceasefire, which is very fragile. I mean, shots have been fired from both sides. They're now taking ships from both sides, I think, have been seized. Some have been shot at clearly with missiles or guns, or they've been attacked. Ships in the Strait of Hormuz. And then, like you said, it's just we're at about 8 weeks. This thing can stand longer, but the market, like you said, you don't quite understand why the market is not reacting worse. It's like the market has already looked past this. So the market's looked past this, saw the worst case scenario maybe as when Trump said he was going to annihilate a civilization. So maybe that was when, because we saw that was right when it started, that 12, 13 straight day move. I want to shift, speaking of cyber defense, first of all, before we shift, I want to say thanks to everyone who's listening, watching. Hit the like button. Let us know where you're watching from. If you want to leave some comments, me and Mr. Stephen will be more than happy to answer them, whether it's now or even later after the stream. But let's jump back into, you mentioned cyber defense inside of this, and that ties into software and the SaaS sell-off that we just saw. Today we saw ServiceNow get destroyed. The IGV actually has been on that, so that's a software ETF for those who don't know, and we're not making any recommendations again, but it's been moving up. But today it was down for one of its worst days in years, and semiconductors continue to grow. Where do you see the AI trade, semi softwares, and the cyber defense? Because the IGV has a heavy concentration with CrowdStrike and Palo Alto.
I mean, I think this is going to cause companies to realize even more that they need stronger defenses. I think that we're going to see some more disruptions, and I think those disruptions are going to, emphasize to people that the enemy is getting stronger, not weaker. And I think that when we look at these countries trying to cooperate together, we've got to know that Russia and China are probably supplying data to Iran in terms of the location of troops and materials for Israel and the U.S. And I think that if we think those satellites for those countries aren't working for Iran, I think that we're probably kidding ourselves. And I think that when we also think about if China's cyber were to be put for Iran's benefit, I think that would have a significant impact. Russia has a huge cyber force, and I think they would have a bigger impact in this war, but they've tried to stay somewhat neutral. And I think that by providing data, they're already over the line, and I think it's just a question of how far over the line they go. I believe that the battles are going to be fought in the Bitcoin space, and how do you control that, and how do you manage that, and how do terrorists and other people use it to benefit their forces and to if we were to see more cyber attacks, I think they would probably, be focused on the areas of the U.S. defense system and the U.S. economy, in which case I think that we have a very large area to guard. Because of our dominance in a lot of different spaces, whether it's bonds or equities or commodities, I think there's a pretty large infrastructure here that is going to be very hard to defend when we look at these countries who are now Iran's ability. That's one thing. It's a $92 million person country. But once you get Russia more involved, once you get China involved, you suddenly are really looking at resources that could significantly impact not just the battlefield, but the economic fields.
Yeah, I mean, I think Russia's probably the leader in cyber attacks. They've been, since 2016, people can talk about Russia and cyber and those type of things. And then they're a large country, but I'm not sure how large their population is. They might compare to Iran. So Iran and
Yeah.
Russia, they're definitely all intertwined for sure when it comes to those things. I mean, they were given information. But if you're Russia and you have the Russian-Ukraine conflict, the U.S. has done the same thing, right? These are wars by proxy.
Right.
Everything's a proxy war inside of this.
I think the question is for Russia is, do they have a bigger plan? Do they have a plan for, Poland is next? I think that that's what NATO is really worried about. I think that they've seen the war has pretty much come to a standstill between Russia and the Ukraine. There's certain areas of the countryside that make it very hard for other areas to get taken. And those defensive postures and those positionings, we know what Putin wants. Putin wants access to Crimea. He wants to keep that shipping location, and he wants to have an access via land to that. I think that Crimea has been gone now since 2016. I'm not sure this battle was at all about Crimea as much as it was about making it a permanent link to the Russia. And I guess I'd comment about Russia in terms of the population not being as large. I would say in terms of militaristic economies, their economy is pretty well developed in the military and the sciences, such that I think they represent maybe a country that definitely, It definitely fights at a weight much higher than it's scheduled, right? It's a much tougher fighter.
Above its weight.
Punching above its weight, yeah. So I think that overall, we don't have, I don't think we have the desire to be involved in some of these circumstances much longer. So in terms of the population of the U.S. and how much longer we want to be spending this money on the, international wars, I don't think they're going to really, with our debt levels and the amount of money we're paying for interest now, I think there's a serious problem with inflation that would really make and disrupt our ability if we keep spending the money the way we're spending it. I'm hearing that we're getting low on supplies of munitions and that we need to call a ceasefire because we need more time to build back up our resources. So,
go ahead. I'm sorry.
No, that's it.
Gotcha. Yeah, I was going to say extend the ceasefire. We're in the ceasefire, I think. Yeah, very salient points. And so, obviously we want to share some value to people. We just sat here and talked about the war and how cyber security should be a priority with everything coming. We ain't even talking about the AI aspect of it yet, because AI is just a whole other thing why you probably need cybersecurity. But like I said, we've seen even and once again, not investment advice or recommend any fund, but the BUG, the bug fund, ETF that tracks cybersecurity, that one's had a rough time as well. How would you tell investors from your chartered financial analysis mind, how would you tell investors what moves they should make right now? Because it seems like you should just invest part of what you have in cybersecurity, right?
I think everyone needs to have at least one exposure to cyber. I think you need to have either an ETF or an individual name with one of the leaders like CrowdStrike or So I think that overall, it's just another type of software that every company and every individual really is going to need. So I think that we should take this downturn in software in this space and say this is an opportunity. I look at the race now with semiconductors again, and I'm kind of wondering if they're being bought up because people think they're, I don't know. I wish and I hope that we're not going to see a replication of what's happening in Hormuz over in Taiwan and Taipei. I think that if there was, I think it would be much more damaging to the global economy, and it would also be much faster because the needs for those chips and those company earnings and everyone's growth forecast for the next 3 to 5 years are all dependent on semis and nano semis. So I think it's one area where the security of Taiwan is really the security of the US technology sector. And I think that right now, Taiwan is in a dangerous position because I think Xi would like to take the distraction of what's happening in the Ukraine and the Middle East and say, I'll just exert a little more influence back home because the US is down one carrier. They're it's harder now for them to actually support. And one of the mentions was, we don't have enough missiles to defend Taiwan now that we've used down our inventory over in the Middle East. So I think that the whole idea of our fleets in our system was we could conduct a multi-ocean war, an effort. We could have an effort going on in the Pacific and an effort going on in the Atlantic or in the Mediterranean. I think what we're seeing now is it's a lot harder to execute, especially when one of those resources, I think they talked about it being a fire in the laundry room, but I think it was actually, Iranian forces that caused it to run out and have to evacuate and get out of the strait. So I look at things and say, we've had some successes with our weapons and our technology, but no war is perfect and no war delivers everything that everybody wants to it. So I think that what we're seeing now is really just a period of thought and reconsideration during the ceasefire, because I think that people have to evaluate how long can you keep fighting and how do you want to keep fighting? Do you want to keep fighting an aerial war? Do you want to keep fighting a war of missiles and cruise missiles? Or do you want to start to progress to a land war? I think the last one is the last thing that we want. I think that overall, Americans polling and everywhere were really against the idea of this leading to ground troops putting at risk. I don't know. What do you think of what do you think ground troops would mean for the markets, Marcus?
Okay, so I think we already had ground troops in there when we went and got the pilots out, and that the markets were happy that we got our pilot back. But if it was like in there for more than kinetic purposes, we're in there fighting. Because I think we'll probably have to put boots in there to get the uranium out, the enriched uranium. I just don't see them just giving it to us. Like even if they do, we'll probably have to escort the inspectors through there, right, to get the stuff out. And that's going to be some visual effect, for the people in Iran, because who knows what they've been told over there, right? So if they see some American troops come through there, what's been sold, so that could just definitely make it hotter, even if we're in Iran in a quote unquote air quotes y'all peaceful situation, right? So I do think if this escalates, if this stays as it is, and trust me, it's bad, but if it just stays and extends, it'll eventually, in theory, kind of play out like Russia-Ukraine, right? You remember how intense Russia-Ukraine was when it first started? It was on the news every morning. They were talking about Russia-Ukraine, and markets went crazy for a little while. They dipped, they came back up, and it just kind of adjusted to it and went back to earnings, right? Which is maybe why we're seeing these markets move the way they're moving now, because earnings have been really strong in spite of this war, in spite of private credit, in spite of AI, maybe because of AI, I don't know, but earnings have been extremely strong. So maybe we should just shift to what do you think of the market? But to answer your question, because I didn't answer, if we have boots on the ground, like unexpectedly, because you got to let the message be signal, right? But if there's something just happens and we get a news flash that American troops were in there fighting and like or engaged in a battle that the American people didn't know about, stock market's going to crash because oil prices are going to go up. There's been the correlation. I was talking to Jake, and when this first started, he was like, "What do you think about the stock market?" And the stock market was going up a little bit, but oil prices were also going up. I said, "That's not going to work right now. We got to have something that's going to." And this was, a month ago. We got to have that event where the market flushes. Even if it's not the deep flush that you usually get, and we have to see the market come up, oil prices go down for a while. So if we saw troops on the ground, those oil prices are going to shoot back up above $120, $150 a barrel. And in turn, I think the consequences would be the stock market would go down. Not one for one, but maybe they'll go down even more and at a much faster pace than we saw at the beginning of this war.
I think the whole verbiage of this being temporary and this being quick and us being out easily has proven to be wrong. So I believe that our understanding of, and it's been a while, we haven't been fighting, actively in different spaces for a while. And you look at us and say, how do you adjust to new technology? How do you adjust to new tools in the battlefield like drones? How do you adjust to cyber blocking? I heard that some of the, what was going on with Iran was it was jamming a lot of the communication devices for anyone who's trying to pass through the strait. So they know what channels they're on, and they would, and you think about that, it seems like a simple thing, but I'm not sure everybody has a clear idea of how narrow it is. It's 21 miles straight, but there's 2 miles in one section that goes in, there's 2 miles in another section that goes out, and there's 2 miles in between. We really only use 30% of the strait to get through. So when you think about controlling that strait, and I saw today there was talk about Iran laying more explosives in the strait, and there were people were shooting at the boats who were dropping off the. I think that Iran is, if we would take the U.S. and Iran and look at ourselves and say in the mirror, who are we? Iran is a century-old, 1,000-year-old civilization. Their religion and their faith and their things, they've been in place for a while. They don't look at things the way the U.S. does in terms of, I really want to release this before Friday's 5 o'clock news hour. That's not the way Iran operates. Iran controls the media, so they don't react to the media. We react to the media. We are people who are looking for quick solutions and quick ideas. We're not looking for a long-range effort here. This is Israel's fight. They really were the ones who were endangered, and we felt as their ally that we had to support them. Our interest in there is really about Israel. It's not about the U.S. So my question is, do we have the stomach for a longer-term engagement here? I think we're going to get tired, and I think it's going to get very, very dangerous for Republicans in the midterms if they let this go on past June.
June?
I think it has to be over by June, and the meetings with Trump and Xi, I think if it's not, those meetings could go very badly, and then you open up the whole rare earth thing again, and you open up, they're not going to be happy if we keep resources and missiles in Taiwan to protect Taiwan Strait. I think that's going to be their issue. And I think that the Iranians have given everyone an idea of, let's control the strait, the Strait of North Carolina. And, everybody now is looking at these short waterways and thinking, hey, we could control this, and therefore we could cause this much pain to the global economy. And I think it's just the straitjacket of war.
Yeah, it's almost like what you see with the bureaucracy in Washington. You have Tom Tillis, who's, his one vote can stop the whole banking committee with Kevin Warsh. Then I don't know if you recall, for a while there, Joe Manchin, I feel like, was the most powerful man in America because his whatever he did was how whatever legislation was going to go through. And then you also have now, like you said, a little place 2 miles wide, 20 something miles long total. I mean, it's not very wide, but those boats are big, so you can only have so many coming through there. Uh, I recall when this first started that you sent me a text and you said, "Did you buy more energy stocks?" You were like, "Have you bought more energy stocks?" I was like, "I'm pretty much fully there." You know, how would you? You know, I was already, and with energy stocks, oil stocks. You asked if I bought oil stocks, not energy stocks. You know,
Right.
so I pretty much have oil stocks already covered. We'll see how it has grown. Those positions have grown, but how would you? What did you look at when it was going in there from a?
Well, first of all, the thing I like to do, I mean, I believe that Trump would be good for energy stocks when he became president. So I told people go long energy, whether it's a 1 year put option on, X, uh, the XL, the
XLE,
sector ETF, yeah,
XLE.
or it's ISO or whatever it is, some of the refiners. I think that when you look at energy, the one thing I'd say to people is try to make it a long-term game. I mean, I really think that whenever we trade, if we don't do long-term trading, meaning 1 year, a year and a day, we're really taking a huge hit from the tax perspective. And that makes the return requirement of the decision you make has to be even higher. So I would say to people, I think you should stagger in. I think you should stagger out. And I think that you should be always looking to try to get to that year and a day when you're trying to take advantage of one of these market moves. And I think that will there be energy be higher a year from today? I don't think so, but I think it's going to go higher before it goes lower. So I agree with you that I think we're going back above 100. But again, if the scenario is that we do get a resolution by June, I think we might see some violence in the next few weeks, but I think there will be a lot of pressure to get a solution. And that solution will probably mean that oil comes back down because the strait is opened again.
Yeah, hopefully that strait is open within the next few weeks for sure. And like you said, positioning, people are looking at it, they say, okay, gas prices are up, so I'm making a ton of money in these energy stocks right now. But energy is a really small sector in the whole entire stock market anyway. So you'd have to have a lot of energy even to be overweight in energy to really capture a lot of this. With those energy stocks, the big ones, I generally like to think of those more, like utilities. I'm planning for the dividend. That's why I put them in the portfolio a long time ago. People are going to get gas, but these companies you should play a healthy and safe dividend that they can cover. And then they buy back into their companies, so they do all types of things that are just increasing their shareholder value. But like you said, Mr. Stephen, they're not going to appreciate at the same rate. Even if they go down from this point next year, you probably will still get in real return once you count in the dividend, something close to whatever this market is going to do. So
Yeah.
have you noticed the shift with the energy stocks now? It kind of was like metals earlier this year, how it's kind of getting memeish.
Yeah. I think the energy space is always a good source for dividends. So I like the energy space because I think that there's a lot of investors that realize it's a cyclical sector. It's not going to have continued growth and stability. It's going to go up significantly, come back down, and then it's going to go in cycles. And I don't like cycles. I like consistency, but I do love yields in the 3 to 5% level. Just as an aside, because I like to be in a live environment, they just announced that they arrested a soldier for a $400,000 bet on the capture of Maduro on
Wow.
Polymarket.
Say that again. So people listening. Wow.
So what we talked about earlier in this podcast was the idea of corruption, and to find that within a half an hour, there's an announcement of an arrest for a soldier who was involved in the Maduro planning, and he made a bet on the Polymarket, something about $400,000. I don't know if that's how much he made with a small bet, or that's how much he put, and it had a larger influence. But my point is that these markets, especially Polymarket, are really pretty new. And I don't think we really understand what controls are in place and what should be in place, and how much the blurring of the line between what's investing and what's just outright guessing is, speculation is really becoming very, very hard for anybody to figure out. What do you think of the difference between futures markets and poly markets?
Got you. Well, you can invest in future markets, right? You can, but you can only trade poly markets. They come out and tell you that they're trading. Poly markets are very interesting. Like maybe that was Samuel I was talking with from Business Insider. We were doing that. I was telling him, like, I've never actually played the poly markets. I've seen poly markets. I see how they work. I see that poly markets are pretty good at predicting things that are happening. But when you mention something like a soldier making 400K off of an event, that can shift the poly market, and they're already knowing the events that are going to happen. So how much is causation, how much is correlation inside of poly markets? I think a bigger thing with the poly markets is that the mentality it's going to create, I think it'll cause people to gamble way too much. You know what I mean? Like,
Right.
how are you going? Because you can bet on literally anything. I know the government said they're working on things to regulate poly markets more. They what contract did they have that they took off? It was about someone being assassinated, or
Khamenei?
maybe it was someone from Iran. Yeah, it was the Ayatollah. They were talking about when they were going to get assassinated or taken out, and like one of the Kalshi or poly markets, one of them came on. Was like, well, we can't have those kind of bets. Another thing with those is, so like we just saw an example of. I saw someone speaking like, what if you're at a live event, or someone who plays on the game, and you're like not even a first derivative of this person, and you somehow you just happen to come to their house before the game with your cousin or your friend. They all know each other, and you see like they're wearing red shoes that night, and there's a bet on that. You know what I mean? Like, how do you even punish that person?
I don't know. I think that, the first free throw, is it going to miss? Like the first, like some of these things, I really wonder, like, is it a skill? I guess that's my point. Is there a skill in determining a winner? Do you believe there's a skill in determining the winners in markets?
I believe there are definitely signals that you can look at and determine winners in markets. Sometimes the markets just do things that don't make sense, right? Like sometimes companies go up that I don't know why they're going up. Sometimes company goes down where they just reported great numbers and everything's looking good, even out in the forecast. I would definitely rather invest in stocks, equities, trades, things like that, where I can see everything, see in the backside, versus playing the poly market. And the poly market is just like I said, it just seems so addictive that being there playing that stuff all the time. So but they definitely the direction of things that are happening.
I think it was interesting because people were theorizing that there was a lot of activity in oil futures and energy futures and market futures, and that was where the crime was going to get committed. And to see that it happened in poly markets, I don't know if that gives me more confidence in some of the rules and regulations around futures and options, because they are more established and they have clearer rules and they have clearer litigation. I mean, I got to think this is going to be a very interesting case of, how do we prosecute this? How do we show that he wasn't just guessing? Because I look at things and say, you can think there's something that's going to happen, but you don't know that something is going to happen, do you? If you and I sit down and we plan that we're going to paint, a park in Charlotte green, and we put a poly market event that this park is going to turn green, we could have been involved, but we're not necessarily. As it got closer, we could have just been guessing that those people were going to do this, and therefore, we're making a projection, just like a speculation, just like anyone else, right?
Right. Or even more diabolical is that you would put the poly market bet that the park was going to be green, and then bet that it doesn't get green and paint it like blue. That's how you catch them on the other side. Yeah, poly markets are definitely an interesting foggy thing. Speaking of foggy things and what people may not be able to see through, we hear about the fog in the markets and the private credit fog. I like to think of it maybe now as for those people who may have drank in their time before. I feel like private credit is more like beer goggles. I think that's how people are looking at the world, right? Like
I think it reminds me of the punch bowl. There was an expression that you gotta make sure that you exit before the punch bowl gets pulled from the party. And I think there was a party where people were looking at these items that couldn't be covered by regular debt offerings and bank support. So they were supported by this secondary market. But I look today and everybody says everything is looking more uncertain. JP Morgan's in the process of setting up a new fund for private credit. So if I see the number one bank, and maybe I'm wrong by a few $billion in the US in terms of reputation, putting an investment in building an infrastructure around private credit, is it because they see an opportunity and they're going to dominate because of their name and reputation? Is it because there are really a lot of scattered and broken assets that they could pick up cheaply and then put them in their funds and then show great return when they build some more liquidity? I wonder if they see a market opportunity here, and we're missing it by focusing on the failures when we should be focused on who's going to make money from the rebuilding of private credit.
Right. Private credit, full disclosure, I had a meeting with some of my clients today with a private credit guy. We were talking about, it depends on what you're in, but yeah, JP Morgan and these other banks. JP Morgan's not the only bank that has a private credit fund that's building a private credit fund.
Right. They're building a new one, I guess. They're starting a new fund, which you wouldn't do if you think that the asset class is going down, you wouldn't necessarily be lining up your clients.
Oh, you mean like selling structured notes during the housing decline, but also on the other side hedging where you're also betting against the credit default swaps?
Yeah, there's a lot of ways for them to make money. I agree that they could be doing something that, but I always like to think that, hey, these banks are doing these things because there's an opportunity here. And I'm trying to figure out, why would you put the best reputation in the marketplace at risk over a space like this, where in my mind, it is still a little bit foggy? I mean, do you think it's clearing, or you think we know more about private credit now than we did 6 months ago?
I think everyone probably knows a little bit more about private credit now than they did 6 months ago, just because people probably didn't even know what it was. People who were even invested in it probably didn't even realize how they were invested inside of it. I think private credit is still going to bump some more. It's going to bump now. I actually did add some of the alternative asset allocators into one of my portfolios in the mix, the Blackstone, BlackRock. Once again, not investment advice. Blue Owl, one of their funds, even actually pays a higher dividend. So stocks like that are really beaten up. I mean, private credit works for a long time. I'm not going to trade these in the next year, but maybe 5, 10 years from now they'll be up. In theory, they should be up and to the right. I think private credit funds. I think what's happened has been good for private credit, actually. Not the people losing money, but the fact that it's been brought to the light more, because private credit was created back in the BDC, back in the 80s to help Main Street. And then it really expanded after the banking crisis when they put more regulations on the banks. So this is supposed to help Main Street. But as we always see, people find ways to make money maliciously inside anything that the government sets up. Look at some of the people who got those PPP loans back in COVID, like some multi-million, got a whole lot of those. So I think private credit, like I said, maybe it was last time, I think you come on, re-rate those books, tell people what the real par value is, so we can just clear this fog and let investors know what they're investing in. People need to realize that these funds are illiquid or semi-liquid at best. Don't plan on getting your money out within the next 5 years or so. And realize that it's just a diversifier as well, right? It plays a different part inside your portfolio. Don't have everything invested in private credit.
Yeah, I think that we're looking at an asset class that is pretty small in the overall scheme of things. I think they talked about it being 1.5 to 2 trillion. And I know that seems like an enormous number, but when you compare it to the market for securities or the market for fixed income or the market for real estate, you realize how this is, the area of crypto. I think it got up to, when Bitcoin was 120, I think it got up to almost 2 trillion in crypto, but now it's, back down. And I think that when we look at these markets and these spaces, we need to take a global perspective and say, look, in terms of things, in terms of how much I should own, it should be somewhat proportional to the market cap of the whole industry, right? And if we look at that and say that puts it at a 1% position, that puts crypto at a 0.5% position. I think that's the way we should be talking about these things. And I honestly think CNBC and others do a disservice to the investing public because we spend a lot of time talking about asset classes that 99% of the listeners aren't holders of, right? Is that doing what when they gave you the rights to broadcast, was it so that you could promote an agenda and issues that are, relevant to the average listener, or is it to try to educate and inform the average investor and the average listener? And I just feel like we've gotten carried away a little bit with the discussion of crypto, the discussion of some of these assets, because in reality, most people aren't going to own them. They're not part of the story. What we want the story to be is good companies making good decisions. I think at Intel, he took a situation with Trump where he went to the White House and he was going to get denied access to all these things. He convinced Trump that what you should do is invest in us and not necessarily disparage us. And now you have an earnings blowout tonight. I think what that says is, hey, there's different ways to make money. And if you're making it on Intel's new exposure and operations in Arizona and building up the US capability for our chip sector, that feels a little bit better than some of the activities we saw with triple collateralized items in private credit, right?
Right. Well, I mean, Intel is now, subsidized. They were boosted by the government. They pay the government a percentage of their returns. So Intel is a personal one for me because I've been watching that stock for a long time, just watching it go up and down, in and out of Intel personally. Had some clients in for a while now, but yeah, to see their crazy returns and their blowout quarter, I think they were expecting, analysts were expecting like 1 cent to 7 cent for their returns, for their earnings, and they per share, and they had like 29 or 30 cent per share. So it really blew out everyone's expectations. Yeah, right. So that's really crazy. And I think they reinforced their guidance for the rest of the year.
Yep.
We had on this call, but it's just like when you see things like that, and the investments that have happened with Intel, it's an effort to onshore. So maybe once we get everything onshore with this chip production, maybe that's when the Strait of Taiwan becomes less. I don't want to say relevant because Taiwan Semi really does.
I think that's Taiwan Semi is included in that Arizona foundry, investment. They want, but I've heard that all of the foundries there are having trouble finding labor. They're having trouble finding qualified workers and people who want to work in, a suit environment where you're going to have a mat suit on to not have any charge or not do anything to damage the chips. And so I think it's going to take time. I don't think we're going to go away from depending on the Strait of Taiwan anytime soon. But all I'm saying is it really is an area where we could be focused over here and worried about what's going on in Iran. And then, while you're focused over there, your enemies are focused somewhere else. So I think it's going to be a very interesting, June with the visit of Trump to Xi. And Xi has another term, so he's, got some more time. And I think his ambition is,
right?
Huh?
Well,
he could probably, as Putin has found, he's able to get a lot of support for, I think he does 6-year terms, but.
Or is that Russia? Someone that is definitely for life now. Like they got elected for life.
But it's really a question of, do they want to disrupt and gather all this energy? But if you look at it, could we walk away from Iran right now? I mean, could we just say, hey, we're going to focus our energy in Asia, in the Pacific, and move those resources? I don't think we could, because I think that Iran would continue to control the strait and they would only let their ships through. And I'm not sure that NATO and some of the other allies are necessarily going to love the fact that the U.S. started this, created this as a hot point, and now walks away to try to solve China.
Right. Oh, right. I'm sorry to interrupt you. I was going to say, and then we speak about, so we start off with the investment side of this, like investments, Taiwan Semi's investing into Intel. We have these Middle Eastern countries that you remember last year? I think it was last year when the president went over to the Middle East and secured all these investments, like up to $1 trillion. I think he said. How are they going to pay for those now if they're, everything's getting bombed? I don't think they've made all these investments yet. You hear a lot of investments, and then it's like, I'm waiting to see these investments. You hear investments, these investments.
I think that we're going to have to wait and see on a lot of things.
Right. Speaking on investments and things close to home, we're both down here in Wall Street South, down here in the Charlotte area. I saw again today where they're putting up legislation about building data centers. People don't want data centers built around here. So, what's your thoughts on that with the data center and just that?
Look, I think our energy infrastructure is probably not ready for it. So I think we need to really think about whether we make some of these data centers self-sufficient. If you provide your own power, then I think you can have a facility. If you're going to go on our existing grid and be the main draw on that grid, then you're going to have to pay for infrastructure and development of a new grid because you're going to make that grid less stable. I think that I wonder how small towns, like let's say you passed legislation and said, all right, they have to be energy independent. Okay, who's going to be the regulator that goes onto the facility and makes sure the server is using its nuclear fission properly? Who's going to be the one that tries to make sure that there are no regulators or use of power or use of batteries that is using dangerous materials? I think that we as a country have not really thought through how creating all of these server farms close to all of this important activity around AI is really going to lay out. I think we have ideas, but I don't think that's why I've said, as I've said before, Marcus, I'll say again, I think that we're going to have to solve the problems involved with the auto driving and self-driving. And those things will cause a disruption in our labor market and a disruption in our systems that is going to, be challenging for this country. And I think that when we solve that problem somewhat, we're going to have an idea of all the layoffs and the other things that are going to get caused by AI in the future. And so I think we have to climb mountain one before we address mountain two. I think it's really hard for us to see all of the things we don't know yet because this is all new to us, right?
Right. And you just gave a real case of they build data centers, who centers. That's how just technology disrupts some jobs, it destroys some jobs, it innovates some jobs. Maybe the person used to work in there now, if someone has a job that does that. How honest they are or whatever with that job, that's up to be seen. I was thinking about AI and the dominance and the technological revolution. And I mentioned on podcasts before, a few months ago, I was talking about horses and cars, right? And I said, we still have horses, but we don't have very many horses compared to how many we used to have, right? The price of horses so forgive me with these numbers, they were either, and this is like right when cars came out, it was either like $1,500 to $2,000 for just like a good horse. And the same type of car was like $10,000. But then once cars came down, it might have been $100, $200 and $1,000, but I think it was $1,500 and $10,000, like the gap. But then Ford started mass producing these cars, and the gap came down to where cars were pretty much the same price. And then people were like calculating. This is one of Henry Ford's things he was telling people. He was saying, you got to calculate how much you paid to up your horse, another $100, $200 a year. The cost of cars are going to be less. So like the cost of cars came down, people and horses went away. We still have expensive AI, right? So people's jobs are still going to be there. And now if you want to buy a horse, a nice horse is going to cost you just as much as a nice car, but there are a lot less horses.
Yeah, I mean, I don't think this is all going to happen quite as quickly as everybody does. I'm more of a gradualist. I think we got to see gradual stability before people will put AI into the sensitive areas. Like I look at, what happens if I get an AI health teledoc and I get an AI response and they tell me to do something and I have a huge reaction to it. Is the medical company that use the technology going to be where I go to sue? Is it going to be the AI developer who I sue? Who's ultimately responsible? I assume the medical company has to verify it, before it becomes part of their process, and they're ultimately responsible for any advice given. But I could see, just like the CrowdStrike problem, who's protecting who and who has the right to sue if there is a problem. So I think our society is going to have a little time to digest this. And I don't think it's clear where and how some of these things are going to be regulated or understood.
Yeah, it's definitely one of the big things. The regulation, how people are playing it out right now. So I know we're running up on a little bit of time here. With your practice right now, with all the geopolitical stuff going on, just how are you managing your active portfolios? How are you managing your portfolio?
I'm buying puts still on the XLK. I believe that the XLK is still overpriced in terms of technology. I think the software has corrected, but I still think there's going to be some pullback in the hardware space as well. I think that SPY puts are in place because I believe that overall the market has, too many challenges and too much uncertainty. And therefore, I think that inflation is going to be a bigger issue. I don't think the Fed is going to be able to lower. So I think that this wash is almost a non-issue, because I think when he gets in, I think eventually he'll have, the ability to lower rates, but not in time for the election. I think they were hoping he gets in May, he lowers rates May, June, July meetings, and now those lowerings significantly affect the economy going into the election. Now I'd say he's not going to be able to probably lower rates once this year, maybe near the end in December. And that's going to be too late to do anything significant in terms of making the affordability better for a lot of Americans. So I'd say that right now, I'm looking at things saying, I think we are at a point where you should be, in my mind, below average in your allocation to risk. And I think you should probably be above average in your allocation to dividends and income.
I know the last two times we were on here, you mentioned that you saw the market going down 10%, and it did the first time. Hasn't gone down 10% the last time. Where you seeing you think there's 10% again?
I see, like I said, the main issues are ground troops and something to go engage with China. I think both of those main issues would cause almost a 20% correction. And I believe that the recent run-up has been, a false move by the market. So I think that there's 8 or 9% that is easily going to come off if things get more serious in the Middle East. And then I think there's another 10% that might come off if it involves China and technology. So I don't think it's really likely that we're going to see. If I were to guess, the S&P will not be over 7,000 at the end of this year.
Really?
I think it will be closer to 6,000.
Really? Well, that's more than 10%.
I think it is, but
now.
I think there's a possibility for more than one thing to go wrong, right?
Yeah, it's like 15, 20%. That's down. That's a big move. That's more than shocking right there. There you go. Wow. Okay. So you do see, so you have your puts played. But what about, so historically, after the election, midterm years, the market should 20 something out, like one time out of the last 21 midterm elections, the market has gone higher. What are your thoughts on that?
Yeah, I think that midterms are hard because they take the existing government that has been doing things for 2 years and they challenge them with, the idea that they're going to lose control of one of the houses. So you really need to hit the ground running in the first term of a president in the first 2 years. And I think it's, they're in a position now where it could become irrelevant. And if the Republicans were blocked and Trump was blocked from doing a lot of the things he's doing because of the majority of the Democrats, I think he struggles, and I think the economy and some of the things that he's trying to put in place permanently, I think they struggle, and I think overall the market would like the idea that there is this kind of battle and there's no one thing that's happening, because the market likes uncertainty in some ways. It likes the idea that no one has control over it going up or down. No one party.
Yeah, it likes gridlock. That might be a better way of putting it. I think the market might like actual certainty. But I know exactly what you mean as far as people are speaking. Before we hop off, let's talk about people are going into safe places they think the market. So you're going down. If you think the market's going down, but everyone doesn't have enough where they can buy options and puts, like they can't maybe do covered calls or anything in that effect. And the dollar seems to be, the dollar's been moving, crypto's been moving, gold's been moving. Where are you seeing as places to hide right now? And what do you?
I think, Marcus, that we should take the 8 or 9% move up and say things got more expensive. That was it. I made that money. I didn't defend as well as I should have last time in creating a defensive portfolio. So sell 10% of your equities and get yourself into safer things. I still believe the commodity, the story is going to be strong, gold and silver. I've also, for my clients, started to look at uranium. I think uranium and the nuclear is going to be a bigger part of the future. If you tell me in 3 or 5 years, I think the U.S. has more nuclear than it has today. So I like those as safe targets because I think they're longer term investments. I think in most cases, you and I agree that there are some really good companies with good dividends, and I think that those companies will continue to be, the healthcare companies in the next 5 or 10 years. So I still like Merck. I still like Pfizer. I'm not recommending these for people to buy. Everybody needs to have their own tax and investment advice. But I think that stocks like that that pay a 4 or 5% dividend are a good store of value and are going to probably go up as well as giving you the income.
Yeah, that's some real solid advice. Real solid advice. I guess see if there's anything else on here. Is there anything else on here you want to cover today, Mr. Stephen?
No, I think that was it. I'd say keep your eye on G. I think Xi is the key. His meeting with Trump and how it evolves in the Strait of Taiwan are really going to be a bigger issue than people are focused on. And so what I want people to realize is we see the problems we see. It's the problems we don't see that we need to be thinking about. And that's why I like the idea of, thinking about what could happen with Taiwan, because you don't want to be having to spend a week to analyze and figure it out. And then the market's already moved in the directions you should have gone, right?
Yeah, you can't try to time the market, right? You should already be in there.
Right.
Maybe just increase your position or maybe decrease your position. I guess let me ask you a couple quick questions before we go off, and you can do these. Let's say higher or lower, okay? Higher or lower. Gas prices in the
Higher,
month. Next time we meet in like a month, higher or lower.
higher,
Food costs.
higher.
Uh,
Transportation of food is going to continue to go up as oil goes up.
so core inflation, things going up.
Yeah, that's usually X food and energy, though. Are you talking about the full one or the X?
Both core and headline.
Okay,
Just
I would say
inflation in
that
general.
the headline one is going up. I'd say the core one is probably going up at a slower rate.
Got you.
It
And
takes longer.
employment.
I think employment in the U.S. is going to decline. I think we're going to continue to see companies who are using AI already to try to make their operations smoother and more easily implemented with AI technology.
And I guess the last big one, interest rates.
I know people are going to hate this, but I think interest rates are going up because I think the inflation will cause a spike and it will concern the Fed. And I could see the Fed not having wash in place until September. And I could see that causing, a vote at the Fed to raise rates, which I think Trump would react almost violently to. So
Yeah. And then I'm going to say some months. You tell me when to stop. Okay. If this war is still going on, 3 months from now,
I'd say it will still be going on until
6 months,
no. I
three,
think it
six.
will have to be resolved before the election.
There you go. All right, man. It's been a really good conversation. I think we've definitely given people some
I think we
interesting
solved a
things
lot
to
of
think about.
a lot of the world problems, Marcus, because I think we're trying hard.
we are trying hard. Hopefully, people are, because I mean, like we said, we speak about a lot of things that may not get put out into the mainstream media and people hear it, but we definitely know facts and we're giving facts to people and actionable steps that people can take.
It just came across that was a $400,000 profit he made on that Maduro trade.
I wonder how much he bet to make that profit. Either way,
I just wonder what do you think he's making? He's probably making 40,000 as a troop.
Yeah, not enough to make that bet. So I guess over or under 4 more people will be indicted or charged like this guy by the time we meet next time on Polymarket.
Over or under 4? I'd say it's an over.
All right. Cool. There you go.
All right, Marcus, it's a pleasure, man.
Thank you, Mr. Stephen. Anyone, y'all got questions? Y'all need anything? Leave them in the comments. We'll get back to you later. Thanks for joining us. We'll talk to you next time.
All right. Be well, people.
Be well.